Berkshire CEO Warren Buffett and Vice Chair Greg Abel once again endorsing Japanese trading houses at the company's annual shareholders meeting in Omaha, saying they could hold them, quote, forever. Take a listen.
I think the thing we're building with the five companies is, one, it's been a very good investment, but we are really, as Warren touched on, we envision holding the investment for 50 years or forever. But I think we also are building relationships to do incremental things with each of those companies. And we really do hope to do big things with them globally. They bring different perspectives and different opportunities than we see, and that's why we're building that long-term relationship with them.
And we've got Lynn to sort of walk us through all this. And, you know, these top trading houses are expecting significant hits to their earnings this year due to obviously tariff-related uncertainty. But Berkshire Hathaway could hold them forever.
Yeah, indeed, Sherry. We did get Q4 earnings from the big five trading houses or Sogososhas on Thursday and Friday last week, but also keeping in mind that at that shareholders meeting, Warren Buffett was asked about that recent market volatility off the back of the so-called Liberation Day tariff announcement, and he didn't seem fussed because he's in it for the long run, looking at value and longer-term investments here. But as far as what we got from the earnings, and particularly the outlook, we had one of the CEOs from Sumitomo basically calling the current set of circumstances unprecedented. And we have Sumitomo for the first time including in its outlook a 40 billion yen buffer to take into account the impacts of the tariffs. Also Marubeni adding a 30 billion yen buffer. Itochu didn't call it as such, but basically flagged 40 billion yen for that potential impact on the global economic environment as well. In terms of FY26 earnings outlook, it was a mixed picture. It was the trading houses that are most exposed, particularly to the commodity cycle. So Mitsubishi and Mitsui, they are expecting their net profit to fall for a third consecutive year. But still, Sherry, though, and I think this is something that Warren Buffett also highlighted as well, these companies are very cash rich as well, and they are still announcing big buybacks as well as dividends to come.
Yeah, and I wonder, this gets a bit technical for me, but Warren Buffett, the way he financed these deals, these investments, was through low-cost yen bonds, and definitely benefiting from the near-zero interest rate environment in Japan at the time of him going in. I wonder,
indeed,
not only with the change of guard at Berkshire Hathaway, but, you know, if the yen changes, can he still lock down these attractive ways of funding these investments?
Well, I think that's a really interesting point that you raised there. But keep in mind that the interest rate in Japan is still at 0.5%. So it is still extremely, extremely low. So that is something that they've taken advantage of in terms of the yen-denominated bonds. And, you know, we know that as recently as, I believe, a couple of months ago, they were issuing new yen-denominated bonds as well. So this is something that a lot of analysts are keeping their eyes on, you know, whether or not we're going to see an increase in the stakes in these trading houses. There's certainly some analysts who are also on the lookout that could also Berkshire Hathaway look wider as well across other Japanese companies.
You know, Lynn, I know you've been crunching numbers on these Sogososha, right? In terms of the sort of traditional metrics that folks look at, investors look at, whether it's price to earnings, price to book, return on equity, how do they shape up?
Yeah, so that's where the value comes in, because if you look at the latest numbers that I've been able to get from the database Refinitiv, if you look at price to earnings or price to book on average, those five trading houses are looking at, you know, around under 12 for the PE ratio, around 1 for the price to book. So this is significantly lower versus if you look at the average on the S&P 500 in the United States. So this is still suggesting a big discount versus fundamentals here, and this is something that I think Warren Buffett, during that shareholders meeting, he's talking about going through some Japanese company handbook, looking through the companies. And when he found these trading houses, they started looking at the balance sheets, and they thought they, hit the jackpot in a way in terms of what they were looking for and what these companies provided as well.
Yeah, it's probably like an OMG moment for Warren and his buddies, right?